Hey folks, Dan Frio here with your closing bell for November 15th, 2024. So I told you rates were going to go up. They're up, and now they're not up quite an eighth, but they're up. And we called it this morning. But we have some revisions coming in. The MBSs went actually from a minus whatever it was all the way down here to now we just turned positive. So we're starting to get a lot of revisions from our lenders right now saying they're reducing their rates based on this news. But the biggest culprit right now, if you go to the Wall Street or not to CNBC, it's red across the board again with the VIX ticking up to 17 now. So the markets are getting a little skittish. The complex part of this is there's no reason in today's basically data, the news, everything you go through, there's nothing that would majorly cause this to reaction. So a nice interview from actually the Chicago Fed. This guy's actually local. He's in Chicago and he runs the Federal Reserve of Chicago. Let's get his take on what the heck's going on with rates. You can see rates will move lower long as we keep making progress toward 1% or 2% inflation. So let's get with him. His name is Goolsbee, and again, he is the Chicago Fed president. So let's see what he has to say about rates in 2025.
Joining us now on the new data interest rates and much more, Chicago Fed president Austin Goolsbee. So your ears were burning probably there. Mr. President, you heard...
Yeah, that was Rick. I haven't seen him in a while. I got to have him over to the Chicago Fed.
He's local.
Exactly.
He's local
You guys should go to, what is that, Scoozy? What's the name of that? Is that restaurant still open there? I think that's where I used to go. A lot of questions, Austin. I thought it was interesting to hear the chairman, Chairman Powell, the other day kind of put some cold water or at least raise the possibility of what we call a pause. We get pauses every once in a while. Maybe we don't do another 25. Coming after a 50 and a 25, which a lot of people, maybe you included, weren't absolutely sure was the right move. Now all this hot data just came out that Rick gave you, which would kind of explain the chairman. But I didn't understand it because the last jobs number was kind of weak. So I didn't know what he was looking at, and I'm wondering whether the Trump trade is now informing some of the Fed's decisions.
So the reason why I handpick these videos is they're right in the wheelhouse of what we talk about. There's millions of videos out there, but I try to pick the one or two most important, basically just drilling down on exactly what your questions are and mine. Where are rates going in 2025? So who else to get it is from one of the Federal Reserve members. And again, this person is from the Federal Reserve Bank of Chicago.
Are you preparing for tariff inflation?
Well, you got a lot going on in there.
I know.
will say,
I think a lot.
I always clarify the rules say I'm only allowed to talk for myself. So if you're asking me what the chairman thought, you gotta reach out and ask the chair. That said, as I look at the economy, the basic story of what's been happening, if you're looking for the long arc, is inflation has come way down from its peaks. The job market cooled to something like about full employment where we want it. We did get 1 month of weak jobs numbers that it's hard to reconcile what does it mean for the long run because we had a bunch of hurricanes, we had a big strike from Boeing. Previous to that,
right.
We had a couple of very strong numbers, and previous to that, we had one weak number. So again, we got to take the through line. And I think the through line, as long as we keep making progress toward the 2% inflation goal, over the next 12 to 18 months, rates will be a lot lower than where they are now. That's where that's where we need to settle. I took from the chair's comments that we're not, I like this phrase, that we're not in a hurry to automatically get there. And I do think if there's disagreement of what's the neutral rate, it does make sense at some point to start slowing how rapidly you're getting there, just to figure out, given the lags of monetary policy, are we at neutral? Are we getting close to neutral? But the overall through line is, I was saying before the election, and I'm going to say now after the election, it has nothing to do with the election. It has to do with what the conditions are. And to me, the conditions on the dual mandate side are looking pretty balanced. And so we should be thinking over the next year, year and a half, the rates need to come down.
So he's on the Federal Reserve, and he's saying rates need to come back down, but they don't know what the neutral rate is. But here's one piece. While these yields were up, here's what I want to explain to you. Here's where the 10-year Treasury is, right there here. So what people can do, or what investors do, is they're like, okay, we can choose between this and a mortgage bond. Okay, so this has 0% chance of default. Zero. Absolutely no chance of default. So what is the risk premium from here to here? And that's a huge risk premium that you're seeing right there. On a 30-year fixed, rate's at 7. Then when you go over to here, the 10-year Treasury is at 4.4. So there's a big piece of juice in that equation. So let's see if he brings up this topic. He might not. I watched part of this video, but I watched segments of it, and it was really good. But I don't know everything that he covered. So let's get back to it.
What do you think, core? If core's 2.8, that's a ways still, and unless you really
that's too high. Yeah, no,
unless you really don't mean to. And there's no reason. Why do you think there's?
What do you mean we really don't mean to? We mean to.
Either you move the goal. I'd move the goalpost. It'd be a lot easier for you guys.
No,
but
I'm not. We're not moving the goalpost.
Then you're not there.
No,
you're not there,
no.
and everything looks like the stage is set for inflation. Maybe it doesn't go back up. But do you really see a reason why it would come down with all the proposals that, and I know you said it doesn't matter with the election, but the stock market and Bitcoin and, government spending is going to happen. We're going to extend the tax cuts, probably. We're going to, no taxes on tips, and you probably work, I don't know whether that benefits you with overtime. I'm sure you're there all the time, but your overtime's not going to be taxed.
Well, I like that vote of confidence, Joe. Look, here, as the chair said in the press conference, when it comes to policy, our job at the Fed is not to speculate about that or weigh in on what the judgments are. Conditions change all the time. If the conditions start to change, we will take that into account. But we will get inflation back to 2%. Now, let's be a little careful. Backward-looking 12-month averages, they're useful. We should look at them, but what matters are the new months coming in. If we're getting new months that are as hot as 2.8, 3%, and we get that on an extended basis, that's too high. The Fed, we've stated it's a sacred covenant. 2%, we will get inflation at 2%. You can't look for a new job until you finish doing your job. So we will have to get inflation to 2%. What exactly is happening if you see the import price number that Rick was talking about going up? We've seen blips. We saw in the beginning of this year a blip up in import prices that was just a bump in the road. And we went back to the new months of inflation coming in right around the 2% target. And that's where it has to be. Otherwise, the Fed has to act.
What do you make of the 10 years? It's done nothing but go up since. Can you give me like 20% because of this, 20% because of that? Part of it's from Trump, part of it's from.
I think
this gets to the juicy part, because you would think somebody that sits on the Fed would know like what kind of the neutral rate would be and things like that. Again, folks, and I don't mean to beat this to a dead horse, this guy sits on the Fed and he's still kind of, the neutral rate, we still don't quite know. I want to hear his take on the 10-year Treasury, because that's one of the biggest questions I get is, why did the 10-year Treasury just skyrocket once the election was over and once the Fed actually cut rates? So let's see if they kind of go down that path.
Some component, we have to figure that out, and we have to monitor those long rates. The Fed is in the business of setting the Fed funds rate, and how that translates into the wider market it translates both with a lag and with something about expectations. It's clear that in the realm of possibilities could be, if they thought growth is going to be higher, that would affect what the long rates are. If they thought that the Fed's short rate decisions the rates would go down at a slower rate than they thought before, that would make the long rates higher. if you take a step back and compare to, say, the spring, they're up in the near term, but they're not up by that much from where they were several months ago. So we for sure should watch this, and the arguments in Washington affect those long rates, but our job is to figure out the longer through line, and as long as we stay on a path to getting inflation down to goal, and the job market is not falling apart, that's the through line that we want. And so far, the through line is basically still that. Unless the conditions change, I'm still feeling good about us being on a 12 to 18 month path of getting the rates down to something like neutral.
Okay, let's see if they tackle the neutral thing, and I'm pretty sure they do. But he still doesn't have an answer. And then this is what drives me crazy, because I'm here trying to provide you guys answers. And even the top of the food chain with the Federal Reserve members are like, well, we don't really quite know. And that's concerning. So let's see if they tackle this part of it.
We have kicked around the notion that we really did have a bull market in bonds that we may never see again, like for 40 years. And now we've had a little bit of an inflation, well, more than a little bit of an inflation scare. Now it looks like it's back under control. But at the same time, we're at 36 trillion, and you're running a deficit this year that's bigger than any of us probably would have hoped for. The size of the Fed balance sheet, all these things, there are people that lose sleep over whether we're going to. The bond vigilantes are going to come back with a vengeance. The dollar hit a new high, though, again. So I don't really, there's a lot of cross winds. I don't know what to think, Austin. But do you think we could have a longer, you think that the bond bull market has resumed?
I mean, that's the same way of asking, are rates going to go back to what they were before COVID? The rate was zero. I mean, we were at zero for a long time.
Here's a perfect example. This is when, a lot of people were like, when are rates going to get back to like 2, 3, 4%? This is what they're talking about right now. The bond vigilantes came in previously, prior to COVID and right at the beginning there, and that's what happened. So let's get his final take on it.
Negative numbers. I don't think it's going to go back to that, in my opinion. But that's different than saying, do you think the rates now are neutral? I don't think they're neutral. I think we're still in a restrictive position.
Okay, so we'll just leave it at that. When he says it's in a restrictive position, he's saying the federal funds rate, the rate that the Federal Reserve controls, is too high. And that's making lending all over for car loans, credit card loans, personal loans, savings, checkings, all these things, those rates to come down. And that's what everybody's kind of looking for, not on the savings side, but on the credit side of the equation. So that's basically our video for today, folks. Right now, the bonds market's completely turned. And again, there's no reason for it. There's nothing in the markets going on. You just heard Goolsbee, the Federal Reserve chairman. He's in the thick of it, and he still doesn't have answers for us. But we love the direction that the bonds are taking right now. This is a huge move up. We're up 12 right now. So bonds or mortgage rates, they did pop. So they're going to probably give this back. So we might be, because of the big move today, we might be back right around 7% by the end of the trading day, based on these numbers that we see so far. So I do have a video coming out this weekend. I posted it before, and it's, should you pay off collections and charge-offs and things like that? Please watch it. Please watch it before you do anything. Before you apply for a credit card, a car loan, a mortgage, whatever, please watch that video. And then I did create a website years ago. It's right through here. It's Credit Scores and More. Please, visit it. Check it out. Kick the tires on this thing. There's multiple sections in here where you can actually get free credit scores. You can get your true credit scores, the credit scores that your lenders use. And there's a whole bunch of blogs and a bunch of other things here. And then this is one credit report basically system or tracking system that I use personally. So check out this video and you can actually get access to that right through here as well. So that's my video for this week, concluding it. Guys, I hope you have a fantastic weekend. My name is Dan Frio. I'm just an average mortgage guy out here trying to win your business and teach you about the economy. So if you want to find out more about real estate and how you can get involved, visit me at therateupdate.com. If you're looking to buy that first house, please check the grant finder right through here. But if you're looking to get the ball rolling on a loan, all you have to do is click the Apply Now button or scroll down. But we have a lot of resources here. Look at this. Do you need student loan relief? Loan programs? What's the processing look like in a mortgage? And more and more and more. Check those out as well as the blogs. But scroll down to the bottom of the website and you're going to see mortgage calculators and a whole bunch of other things. But at the bottom right down through here is the 800 number. It's 844-775-5626. Or you can reach me by email. Yeah, I'll be the one answering at dan@therateupdate.com. So thanks so much for watching, guys. I hope you get something out of these videos. Don't forget to come back and visit us next week. And then don't forget also, we have Stock Talk Tuesdays with Dan. I talk about the stock market, equity markets, and how you can maybe look at investing, trying to educate you guys there. And then we also have a live event every Wednesday where we're here to answer your questions on home buying. So thank you so much. Have a fantastic weekend. God bless. And I'll see you back here next week. Bye-bye.